Okay, Bismillahirrahmanirrahim. Let's look at the type of incremental analysis. We already looked into the accept or reject a special order. We have already looked into make or buy decision. We also have looked into sell or process further. Then now we look into whether you want to repair and then you retain the equipment or you want to replace with a new one. Okay, for example, let's look at this illustration. Jeffcoat company is considering replacing a factory machine with a new machine. So you want to replace, you have a factory machine and you want to replace it with a new one. So Jeffcoat company has a factory machine that originally cost 110,000. So this one, you have the original machine and the cost of that machine is 110,000. So this one is your sunk cost. You already incurred that cost in the past. It has a balance of accumulated depreciation of 70,000. So its book value is 40,000. And then it has a remaining useful life of 4 years. So you can see here the original cost is 110,000. You have the accumulated depreciation of 70,000 and you have a book value of 40,000. So what is depreciation or accumulated depreciation? This depreciation is basically the cost of wear and tear of your asset. So for example, if you have a car, then the wear and tear because of the usage of your asset or because the usage of your car, then after some time the value will reduce. So the reduction in value is called the depreciation. And then, for example, for your your non-current asset, your asset, you can use it for more than 1 year. If you can use it for more than 1 year, so let's say the cost of wear and tear is, let's say, 5,000 per year. So if now, let's say you are in year 4, so year 4 will be 5,000 times 4 years. So that the 5,000 times 4, that will be 5 times 4 will be 20,000. So that 20,000 is called the accumulated depreciation. So that is basically what depreciation is all about. So for example, if what is meant by net book value? So cost, you have a cost, let's say here 110,000. Depreciation means the cost of wear and tear of that particular machine, the reduction in value, but you calculate it per year basis. And then if for accumulated depreciation means you times with the number of years, okay, that you have used the asset. So your cost minus your accumulated depreciation gives you your net book value. So that is the idea of depreciation and net book value. And the accumulated depreciation means you accumulate it over a number of years. Back to this one, it has a remaining useful life of 4 years. That means your current factory machine has a remaining useful life of 4 years. That means you can use the asset for another 4 years. The company is considering replacing this machine with a new one. So you want to decide whether you want to retain that current machine or you want to replace it with a new one. And the new machine, the cost is 120,000. And then the zero salvage value, that means after 4 years, the machine has zero sales value. And then you can use the machine for another 4 years. If the new machine is acquired, so that means if you purchase a new machine, then the variable manufacturing costs are expected to decrease from 160,000 to 125,000. So this one is the variable manufacturing cost will decrease from this much to this much. And then the old unit, that means the old machine, the old factory machine, you can sell it for 5,000 ringgit. So the question asks you to do an incremental analysis for the 4-year period. Again, to summarize the story, you have this old machine. This one is the old machine. It's originally cost 110,000. Should you consider this? No, you should not consider this because this one is your sunk cost. But should you consider this? When you sell it now, you will get 5,000 ringgit. So this one is relevant because you have not get this amount yet. So this one you already incurred it in the past, already purchased this machine. So this one is a sunk cost. This one is an irrelevant cost. Okay, do you want to decide whether you want to retain this machine? In this case, you are not repairing it. So you want to decide whether you want to retain this machine. You want to retain this machine or you want to replace with a new one. So if you were to replace with a new one, the cost will be 120,000. So this cost is relevant for your decision making. The new machine, the cost of the new machine that you want to acquire. Also, you are being told that the variable manufacturing cost will decrease from 160,000 to 125,000. So let's do the incremental analysis, whether you want to retain this old machine or you want to sell it, you want to get rid of this machine and you want to purchase a new one at this much. Okay, let's do the incremental analysis, and the question asks you to do for 4 years. So if you look here, if you retain the equipment, the variable manufacturing cost mentioned just now is 160,000 if you retain the equipment. But you are doing it for 4 years, so that will be 160,000 times 4 gives you 640,000. And then what about the if you were to replace the equipment? If you were to replace the equipment, the variable manufacturing cost will decrease from 160 to 125. So replace, your variable manufacturing cost will be 125,000. But because you are doing it for 4 years, so you have to times with 5. So your variable manufacturing cost will be 500,000 if you replace the equipment. And then what about the new machine cost? So here, the new machine cost, if you retain, you don't need to incur that cost. But if you replace, you need to pay 120,000. What about the sale of the old machine? If you sell the old machine, you will get 5,000. But if you retain, you don't need you won't get that revenue, the sale of the new machine. So you will get 5,000. So because you are looking at it from the cost perspective, so revenue is considered as a negative item. In this case, because you are looking at the cost. So your cost is 615,000. Okay, so if you look at the net income increase or decrease, so the difference in your variable manufacturing cost, if you replace the machine, so you will have a savings of 140,000. Because if you retain, then the variable manufacturing cost will be higher because this one is an old machine. So most likely you will incur more cost as compared if you were to replace with a new one, because the new machine will be more efficient and then you can reduce your variable manufacturing cost. So you will have a cost savings of 140,000. And this one, you will incur the cost of purchasing the equipment or the machine, that is 120,000, and you will get a savings or the revenue of 5,000 if you were to sell the old machine. So the net effect is that you will get a net increase in your income. Net income will increase by 25,000. So net income will increase by 25,000 if you were to replace the machine. So what is your decision? What is your decision? So your decision will be to replace the machine because the net income will increase by 25,000. So you will replace the machine. You look at the net income increase by 25,000. Okay, replace the machine. Next, additional consideration when you want to decide whether you want to retain or repair or retain something or you want to replace the equipment. So additional consideration, so the book value of the old machine. The book value of the old machine does not affect the decision. As mentioned, it is a sunk cost. And then costs which cannot be charged by future decision, that cannot be changed by future decisions are not relevant in the incremental analysis or things that you want to consider when you want to make decision. Anything that is irrelevant, anything that is in the past, you already incurred in the past, so that is irrelevant for your decision making. However, any trade-in allowances or capital disposal value of the existing asset is relevant. In this case, the 5,000 ringgit. The 5,000 ringgit is the sales value of your asset. So if you were to sell the asset, you will get 5,000. If you retain the asset, you don't get that 5,000. So there is a difference in the choices of in the choices of the alternative, whether you retain or you replace. So therefore, in that case, the 5,000 is relevant for your decision making. So hopefully you can get understanding on this repair, retain or replace a certain equipment. So sometimes in this case, you only decide whether you want to retain or replace, but there are also scenarios whereby you have to incur certain costs, repair costs. So again, that repair, if let's say you were to incur that repair cost, then only you retain the asset. You need then that repair cost also you need to include, because there is a difference if you want to repair and then retain compared to if you were to replace the asset. So hopefully you have a better understanding on this. So thank you very much.